Welcome to today's online lecture. In this lecture, we are going to continue studying chapter 4 by explaining deductible costs. In the previous lecture, we have studied condition for applying the tax, and then determining the profit of commercial and industrial activity, taxable commercial and industrial activities, taxable revenues, and finally profit from long-term contracts. In today's lecture, we are going to study deductible cost, and next week, inshallah, we're going to study losses carried forward and tax exemptions. For the topic today, which about deductible cost, the taxable commercial and industrial net profit is determined based on the gross profit after deducting all costs and expenses needed to realize such profits. Deductible costs and expenses must be related to the commercial or industrial activity of the firm and essential for carrying out the activity. Real and supported documents except for costs and expenses which customarily have no supporting documents. Related to the taxee in applying the accrual basis except for costs and expenses approved by law or the tax authority according to the cash basis. And finally, the cost must be revenue-based rather than capital-based. Deductible costs can be divided into primary categories. The first category, deductible costs under the law. These costs and expenses are stipulated in Article 23 of the law as follows. Interest on loans used in the activity regardless of their value after deducting the non-taxable or legally exempted credit interest. They are the cost of borrowing used in the activity, whichever its value, excluding the value of debit interest of loans not used in the activity after deducting the non-taxable or legally exempted credit interest. Such interest shall be considered deductible under the following conditions. Credit interest obtained by the establishment from other parties not subject to or exempted from tax must be subtracted from the debit interest. Value of the interest paid shouldn't exceed double the credit and the discount rate declared by the central bank at the beginning of the calendar year in which the tax period ends. Interest shall not be paid to non-taxable or tax-exempt natural persons. Interest shall not be a financing and investment cost related to legally tax-exempt revenues. Second item of deductible cost is the depreciation of fixed assets. Depreciation of the establishment assets, as stipulated in Article 25 of this law, is one of the deductible costs and expenses. Article 25 of the law defined how to compute the depreciation burden for all the establishment assets except for land, work of art, monuments, jewelry, and other assets which by nature are not depreciable. First group of fixed assets is buildings, establishment, ships, and aircrafts. They are depreciated according to the law at a rate of 5% of the cost of procuring, constructing, developing, renovating, or reconstructing for each tax period. In other words, these assets are depreciated using the straight line method over 20 years for tax purposes. Second group of depreciated assets are purchased intangible assets. In applying provision of second clause of Article 25 of this law, Article 33 of the Executive Regulation defines purchased intangible assets as non-physical assets kept for use in production or the supply of goods or services or for leasing to others, such as license, property rights, trade names, patents, copyrights, and the motion picture films acquired by the establishments. Intangible assets purchased, including goodwill, are depreciated at a rate of 10% of the cost of procuring, developing, improving, or renewing for each tax period. As for the internally generated intangible assets, they are depreciated at the same rate, but considering the exclusion of the cost of establishing the intangible asset that was charged within the cost in previous year under the Egyptian accounting standards. Computers, information systems, softwares, and data storage equipment are depreciated for tax purposes at 50% of the depreciable base for each tax year. All other assets, furniture, machinery, equipment, cars, etc., are depreciated 25% of depreciable base for each tax period. In applying the provision of Article 25, Article 26 defines that the depreciable base means the book value of the assets as included in the opening balance sheet for the tax period. If the depreciation base is negative, the sale value of the assets or the damages shall be added to the taxpayer commercial and industrial profits. However, if the depreciation base doesn't exceed 10,000 Egyptian pounds, the entire depreciation base shall be treated as deductible costs. Accordingly, the depreciation base for the latter two assets categories can be computed as follows. First item is book value of the assets as included in the opening balance sheet for the tax period, plus the cost of development, improvement, renewal, or reconstruction, minus the proceeds of selling the assets, and also minus the compensation received as a result of their losses or depreciations. The outcome is depreciation base. Third item, accelerated depreciation of machinery and equipment. Article 25 of the law stipulates that on the taxpayer request, 30% of the cost of the machinery and equipment used in production may be deducted, whichever they are new or used at the beginning of each tax period during which such assets are used. Depreciation is stipulated in Article 25 shall be calculated for that period after deducting the said 30% amount. Consequently, the requirement for the application of this article's provision can be summarized as follows. Only industrial establishments are eligible for applying this provision. Accelerated depreciation applies exclusively to machinery and equipment. Machinery and equipment shall be used in production whether they are new or used. Depreciation basis should be calculated after deducting the accelerated depreciation of 30%. It's allowed to deduct accelerated depreciation in the first tax period during which these assets are used. Taxpayer must maintain regular books and accounts. The fourth item, fees and taxes. Except for the tax on profits from commercial and industrial activity, all fees and taxes incurred by the establishment due to the practicing the activity are deductible. Such deductible taxes and fees include real estate tax, stamp taxes, custom duties, and other costs. Social insurance contributions. It should be emphasized that the social insurance contributions in favor of the taxpayers are personal obligations unrelated to the establishment's activities. However, the legislator allowed them to be subtracted as deductible costs. Amounts deducted annually for the account of the special saving or pension funds or others. Amount deducted annually by firm from their finances or profits for the account for the special saving or pension funds or others are considered deductible costs, provided that the amount deducted doesn't exceed 20% of the total salaries and wages of their employees, and provided that the system has its own regulations or terms stipulating that the payments made by them under such system served as severance or pensions, and that the funds of the system are separated or independent from the firm's fund and are invested for its own account. Accordingly, the condition that must be met to consider these amounts are deductible cost can be summarized as follows. These funds must be governed by the provisions of the Private Insurance Fund Law number 54 of 1975, or number 64 of 1980. Deducted amount doesn't exceed 20% of the total salaries and wages of the employees. System funds be independent of the establishment's money as the following must be met. System should have a bank account separate from the establishment's accounts. System funds be invested for its own interests. System should maintain the independent books and accounts from those of the establishment. Establishment that apply the system are bound by regulation or certain conditions, stipulating that what the establishment provide is in exchange for severance allowances or pension. Number 7, insurance premiums against the disability or death. Insurance premiums taken out by the taxpayer against his disability or death, or to provide for a sum of money or annuity are considered deductible costs provided that the amount of the premium is not more than £3,000 per annum. Donations and subsidies. Under Clause 7 and 8 of Article 23 of the law, the following expenses are deductible. Donation to the government, local authority units, and other public legal entities, whatever their value. Donations and subsidies to Egyptian non-governmental organizations and foundations, registered in accordance with the provision of their respective regulatory laws, as well as to educational institutions and hospitals subject to governmental supervisions, and Egyptian scientific research institutions, providing they don't exceed 10% of the taxpayer annual net profit. Financial penalties and indemnities. Financial penalties and indemnities borne by the taxpayer resulting from his contractual liabilities are deductible costs. In contrast, a fine incurred by the taxpayer for violating tax laws, compulsory pricing, catering, commercial fraud, and other are not considered deductible costs. Disregard the second item of Article 24 of the law, affirm that fines, financial penalties, and indemnities ruled against a taxpayer due to his or one of his affiliates, commission of an intentional felony or a misdemeanor, shall not be considered deductible cost. Article 28 of the law stipulates that the deduction of bad debts excluded by the taxpayer from the firm's book and accounts may be permitted if he presents a report by an accountant enrolled on the accounts and auditors registers indicating the fulfillment of the following requirements. Firm keeps proper accounting records. Debt is associated with the firm's business. Amount of the debt has been previously included in the firm's account. Firm has taken serious action to recover the debt but failed to collect it after 18 months of its due date. Such serious action to recover the debt include the following: obtaining a rate for payment in cases where this is possible, issue of a judgment by a court of first instance obliging the debtor to pay the amount of that debt, claiming the amount of the debt during procedures of implementing a court judgment for the debtor's bankruptcy or concluding a conciliatory agreement preventive of bankruptcy. The debt or part is collected, the amount collected must be included in the firm revenues in the year in which the collection took place. Other general expenses not supported by documents are the expenses and the costs that are not customarily documented by external documents and for which internal exchange voucher or price lists are available, such as the following: internal transportation expenses, buffet expenses for internal hospitality for the establishment customers, cleaning expenses, syndicate stamp necessary for the establishment business, regular maintenance expense, newspaper and magazines published daily, weekly, or monthly as necessary by the nature of the profession or activity. Under Article 28 of the Executive Regulation, these costs, including tips, are deductible, provided they don't exceed 7% of the total general and administrative expenses supported by documents. Allowances and reserves. Different types of reserves and allowances shall not be considered deductible costs, and sometimes they shall be considered deductible costs as much as the provision has been used. Second, the category of deductible costs are costs that are customarily considered to be deductible. Establishment expenses. It's one of the deferred revenue expenses or capital expenditure that are depreciated over 3 to 5 years, and these costs are deductible. Salaries and wages, they are deductible costs according to the following. Salaries of the taxpayer relatives, it's considered one of the costs that must be deducted, provided that it's in exchange for actual work and within the limit of a similar wage. Salary of the establishment owner, it's not deemed as a deductible cost because the owner is not considered a salaried employees, and this is a concealed distribution of profit. Employees' salaries, wages, and bonuses, it's considered deductible cost regardless of their amount. Commissions are the amount paid to non-employees in exchange for their work on behalf of the establishment. It's regarded as one of the costs that must be subtracted if it's related to the activity or to ensure its authenticity, if it's not tied to the activity directly. Travel and transportation expenses. It's one of the expenses that must be deducted after confirming their authenticity and their connection to the establishment activity. Automobile expenses. They are considered deductible costs provided that their ownership is verified within the establishment assets. If the vehicle is used for the taxpayer business and personal purposes, 2/3 of its annual cost is deductible. Insurance expenses. Non-refundable insurance such as fire insurance premiums, theft, embezzlement, or workplace accidents are included in the deductible cost. In contrast, refundable insurance such as rental insurance is not deemed deductible. Promotion and advertising expenses. These are costs incurred by the establishment to publicize and promote its activities, which can take numerous forms. Periodic and reminder advertisements are one of the costs that must be subtracted in the year they occur. Advertising campaigns is one of the costs that must be deducted based on the period covered by the advertising campaign. Number 8, real estate rent, which is the establishment occupies, is considered one of the deductible costs. Allowed discount is a deductible cost. Judicial expenses, it's considered deductible cost under the following conditions: related to activity associated with the intentional wrongdoing. Number 11, theft and embezzlement losses are considered deductible costs unless the taxpayer recover them. It's considered to be supported by official documents such as police reports and public prosecution investigation. Periodic restorations and repairs such as glass panels or paint works are among the costs that must be deducted. Actions that increase the asset's capacity or extend its useful life are considered capital expenditure charged to such assets and depreciated when applicable. Small additions to maintain the performance of an asset are considered deductible expenses. Thank you for watching and see you soon, inshallah, in the last lecture on Chapter 4 Commercial and Industrial Activity. Good luck.